Hey guys, what a great way to finish this week out. We had a really strong week trading this week. Especially had a strong finish to the week today, trading wise. Also, the Bulls also they managed to finish out very, very bullishly here. So let's talk about it. So we had this nice cup and handle right here. We put the handle in right here. I would have thought we would have held 390.1, but we actually broke down and we reclaimed it today. With this candle's bottom support being directly at 390.1, this should be considered a support retest before we push higher. The biggest things that happened here is the bulls were able to retake the daily 20, 100, and daily 8 EMA all in one move. Now we're back up in the same channel that we traded in right here, this 393.7 to 401.7 area that we traded back in November. So we touched it, rejected, and now we're back in it. So I am bullish going forward for next week. So a couple things to note here. We'll zoom out and you can kind of see what I'm talking about here. On a daily standpoint here, we have our consolidation channel right here, or sorry, not consolidation, our breakout channel right here, triangle right here. So if Monday we break through 398.3, that's a $3 move green, that breaks us through this resistance line from our peak on CPI in December and then last week. If we break through that, then we are presumably going to be pushing for 405.3, which is that next channel resistance that is represented with the 390.1, this purple channel right here. The other things to watch is we have the green trend line right here, which is the previous 2022 bear market resistance line. For Monday, that sits right about 399.3. And then we have current bear market resistance right there at 402.8. All three of those resistances are well within range of being touched on Monday. So the biggest thing here is we are breaking out presumably, and really until we close below 390.1 and we break this support line right here, there's really no reason to expect downside. Many people right here thought this was going to be a bearish reversal from up here and we were going to see the continuation down here, but realistically we just don't have the news or the bearish catalyst yet to do that. As I mentioned, FOMOC is one of those, and also we could have earnings coming in this week and the weekend after, and potentially a CPI miss the week after that to do just that. Until that happens, honestly, there's really no reason to be bearish just yet. So go over to the weekly time frame here. I always talk about how I don't like talking about the weekly chart intra week, just because on really even yesterday, if you would have looked at this weekly structure right here, you would have assumed that with us being below 390.1, that this was a double top short peak bearish engulfing weekly candle closing below the daily weekly 8 and 20 EMA, and that would have led to a breakdown here. We are forming a very ugly inverse head and shoulders, as you can see right here. I really don't enjoy sharing this pattern, as I just feel like by the time it plays out, or if it plays out, it's just very hard to capture it correctly. And especially this one, really the head should be lower down here. But if we're playing that, and that's what we're seeing, we could see a breakout all the way up to 408.9 before we could see a retrace down to the 340s, 360s area here. However, what I'm also seeing here is we have a really nice weekly breakout triangle right here. Support for next week is going to be right here at 385.7, and resistance is going to be right here at 401.9. If we break through 401.9 at any point next week, we effectively have broken through the new bear market resistance line and this breakout triangle, and by all means that should present upside movement. That would also be a weekly candle closed over the weekly 8 and 20 EMA, and potentially over the weekly 150, depending on how high we go. I more or less am expecting us to break through 398.6, which is my current resistance level. From there, I am looking for a push to about 408.8. Over the last year of FOMOC, the week leading up to FOMOC has led about a 4% plus or minus move on the markets. That 4% move up or down would put us pretty much right at 409 to 410, or put us right back down here in this 380 area. So we should be looking for one of these big moves next week. And with the bullish momentum we have, and knowing that we could get a 4%-ish week, and if we get some good earnings from Microsoft, which I do suspect, and if Tesla surprises to the upside next week, which I do think they might miss, we very well could be looking at a test of 410. Now, this is my red channel that I talked about, that I think primarily most of trading in 2023 is going to take place between this 375.6 to 408.8 area. I very well think we are going to test this. However, if we break through that 408.8, then we're looking at testing the bear market, bull market line. What this is right here is to transition from a bear market, which we are in right now, to a bull market. You have to have a 20% recovery from the bottom. So our low of the year, or the market, is 348.11. That 20% above that is 417.73. But 1 penny to be over it is there, 417.74. If we break through that, that's going to be very interesting to see how the market reacts. We very well could see some big money flow back into the market with the FOMO of that they're missing the bull market returning. Just hearing that the bear market is over is going to fuel some of the algos, that is for sure. Taking a look at futures here, another very bullish looking chart here. This really almost could be a very long bull flag here too, with this being our flag, or this being the staff, and then this is the flag. If that's the case, then like I said, we are going to see this push up here. Same breakout triangle right here. That resistance from Monday is 40.14, and then supports all the way down here at 38.75. With a closure back over 39.20, which is my pivot for futures, closing back over the 100, 20, and 8 EMA. Really, next thing that is up is at 4,000 right here, which is the daily 200 EMA. That daily 200 EMA on SPY sits right at 389.2 right now. Looking at futures weekly, same thing, the ugly inverse head and shoulders right here. Kind of looks like a smiley face, honestly. But this push right here, if this is a bull market cycle here, I mentioned this last week in my TA, then this is our push up or short bottom before the next leg up. Versus if this is a bear market, I was saying this was our short peak before the leg down. So I still favor that this is the upside. And I mentioned, or I have this labeled on my chart here, 7 weeks post-collar and 11 weeks post-collar. So looking at the last year of trading, generally speaking, post-collar rolling, so that's the December quarterlies, about pretty much for the 7 weeks after the collar rolls, the market pushes one direction. Currently, that collar rolled back here in December. We have been pushing green. The expectation should be that we continue to push that until that 7th week. Sometimes we will push until the 11th week, but most of the time after the 7th week, we see the retracement. You kind of saw that here. We had our collar roll somewhere down here, right here in the September right here. You see we had push for many weeks, and then about that 7th to 11th week, we had the retracement into the collar roll right here. So I'm looking for the same trend, which really could put us looking to hit that 42.80 mark that I'm talking about as my upper 2023 range resistance. Key levels I'm going to be watching from next week is 40.20 and especially here at 40.95. That 4% gets us to about that 40.95. For next week, 41.05 is the bear market weekly resistance for futures. It's a very key level to watch. Taking a look at Tesla here. So I mentioned back here that I was pretty bearish because we were holding this 123 level. And then really once we broke up here and touched the daily 20 EMA, I suspected this to be our short peak. I did go short on Tesla. Thankfully, I went longer 30 DTE. We had this big breakout here. I expected us to touch 136 as a possibility, and then we hard rejected. We came back down here, and what could have been a very, very bearish turn with this rejection and losing the 20 EMA touching the 8 here, we very well could have came down here, broke this rising wedge, and that would have been extremely bearish on Tesla. However, they actually turned it into a very bullish week on Tesla. With this closure over the daily 8 EMA here, we actually have 9 closes in a row over the daily 8 EMA, not candles, but closes over the daily 8 EMA. The last time that happened was the day before the September sell-off started on Tesla. If we get a 10th, that is going to be extremely bullish. So what I'm looking for Monday is for Tesla to hold 129.2, which is this rising wedge right here. And then from there, we're going to really start looking for the upside. Until Tesla breaks this red support line right here, I am bullish. I am in some calls for next week. Now, mind you, earnings is on Wednesday night at market close. I would not be surprised to see a run up on Monday and Tuesday leading up to that. And surprisingly, IV was very low at market close here for 7 DTE calls for the Friday expiration. So I did pick up some of those. IV was about 87 to 88%. I do suspect that's going to hit the upper 100s, maybe 200. Just kind of depends. Netflix was hitting about 220 yesterday. So I'm going to definitely be looking, and that will definitely be favorable to premiums if we continue this upside push here. Taking a look at the weekly, so this is that sell-off I have been talking about for the last 3 months now, that started back here in September. We have officially broken this red falling wedge on the Tesla daily or weekly here. That is extremely bullish. Breaking a pretty much 3-month-long trend line is very bullish. I would have liked to see a little bit more of a continuation candle here, but I do like this V bottom of 3 weeks now holding this support line, and I do favor the upside. There's a very good chance we could see Tesla go as high as 149.9 next week. And if we do see Tesla get good earnings and it closes over the weekly 8 EMA, that is also going to be extremely bullish going forward. And we very well could, over the next couple weeks, expect a test of up to 175. However, if we get some really bad earnings on Wednesday, or we just get a bad shift in the market, we could see Tesla reject this weekly 8 EMA here, and I would start targeting a retest of at least 112.9 area, if not all the way down to 94 or my test down here at 94.4. Taking a look at the VIX, I mentioned this falling wedge we're in. This falling wedge gives us room to get almost all the way to FOMC, which is on February 1st, while still maintaining this channel. I have a feeling that we're going to see another closure under 19.7 on Monday, and we're going to maintain this blue resistance line. Until we break through this blue resistance line and close back over the daily 20 EMA and 8 EMA, I don't really have a reason to be bearish on the markets. The VIX is selling off. Nobody's risking up. Nobody is putting on hedges right now. And mind you, the VIX has been detached, obviously, because of the 0 DT every day. But nobody is really in the fear. I mean, looking at the fear and greed index right now, we're sitting at about 59. So the greed is definitely there versus the fear, and people are capitalizing on that. I fully expect upside for quite a while here. Something else to look at, Bitcoin right here. Bitcoin has led this charge, and I've been saying this for a long time. These consolidation periods here on Bitcoin have made it hard, but with Bitcoin being so extremely bullish and now basically trading over its daily 200 EMA, I mean, Bitcoin is trading at a level it has not traded at since September. And pretty soon here, since it's traded in August. This is extremely bullish for the markets. People are not going to go risk heavy on Bitcoin, which is obviously a risky asset, if they're not bullish on the markets. Risky assets are one of the last things people are going to pile into, because they're not going to trade Bitcoin, as you can see here, with how much it's been smacked down over the year. That's going to be the biggest thing people sell first in a crash. So markets are not going to be bullish people are not going to be piling into something like Bitcoin if they're bearish on the markets. This tells me the sentiment in the markets right now, and with retail traders and stuff like that, is extremely bullish. And I would just not fight that momentum yet. There will come a time where this could change, and the next 2 to 3 weeks with earnings and FOMC and CPI after that is probably the last chance the bears have to take back control. Now, mind you, I am not saying that we are going back to all-time highs. Just because I'm bullish does not mean we're going back to all-time highs. Now, currently my channel that I am watching is 409 to really 376. However, there could be a case to be made that we are going to start trading eventually in this bear market, or this new bull market that's coming, from 420 to 453. That is another pretty nice consolidation area that we have traded in and we rejected here. So that is what I will watch next if we get a lot of bullish momentum over the next couple months. Now, we still have to worry about a Fed pivot and a Fed pause, and that could definitely negatively impact the market eventually. But right now, the market is just bullish, and the sentiment is bullish, and I just don't think we should bet against that just yet. All right, I hope you guys had a really good week trading, and I will see you guys next week. Thank you for tuning into this video. Don't forget to subscribe and like to stay updated with my most recent videos. There is a lifetime Discord link there for you guys. If that one doesn't link, just go ahead and send me a message and I'll get you guys a new one. Some of the benefits of the Discord is there's a live trading, live intraday commentary. I also do an updated pre-market with support and resistance levels every day. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit.